Alright, hey guys, welcome back to another stream. This is RJR Nabisco part 2. Actually, so, alright, I was gonna say something, but not gonna say it right now. Pretty much, this is a continuation of a previous stream I had for one of my classes at school. I have to look at the RJR Nabisco KKR, I guess you could say leverage buyout, and kind of how the whole LBO unfolded. Also taking a look at some of the financial assumptions that KKR, and there's this group called the management group, which was a group of the senior leaders, so the senior management of RJR Nabisco, that were also trying to take the company private. So I think in this stream, I'm going to try to finalize what I had looked at yesterday. First, I think, let's pull it up. Cases, RJR Nabisco. Okay. So this is a good company background. 1988. Before we even get to the company background, all of the events described in this case took place in 1988, 1999. At the time, RJR Nabisco was this huge consumer staples conglomerate that was mainly comprised of a food business and also a tobacco business. Food business was higher, I guess you could say, had a higher amount of sales, while the tobacco business had higher operating income. So in the tobacco business, you have these brand name cigarette brands, Winston, Salem, Camel, and Vantage. I took a look at some of those last time and saw that I think a few of these ended up being sold to other companies post 1989 after the whole buyout happened. And food, so some of the most notable brands came from the Nabisco company, and this was acquired by RJR Nabisco in 1985 for about $4.9 billion. Some of the more common ones you probably heard of are Oreos, Ritz Crackers, Chips Ahoy. And then you also have the Del Monte company. The Del Monte company was selling fresh fruits, canned fruit, different types of fruit products. So that's a quick overview of what RJR Nabisco is. Now, I guess you could call this a story, and our story starts around 1988 when you have a group of people called the management group, comprised of chairman of the board, president and CEO, and the vice chairman and the CEO of R.J. Reynolds Tobacco. This guy named F. Ross Johnson was the guy who spearheaded it. He had previous activity and skills in managing companies that were selling or being bought, especially in the food industry. I think he was the CEO of maybe Nabisco and also a previous food conglomerate that ended up being bought out. And for some context here, there's also a lot of groups that were looking to buy or maybe combine or take over different types of companies within the food industry at this time. So you had Pillsbury. They were in the process of being taken over by Grand Metropolitan PLC. And then you have Kraft, and they were being taken over by Philip Morris. Pillsbury, I think if you ever saw the Pillsbury guy, he's a little donut type figure. It kind of looks like Baymax from Big Hero 6 with a little chef's hat. I just remember that one of the big products they have are the toaster strudels and maybe some bakery type products. So Kraft is in the business of making sauces, mayonnaise. I think there's also Kraft mac and cheese. So there's these, I guess you could say, traditional American type foods that were produced by this company. And Philip Morris is a cigarettes tobacco manufacturer. So I think at this time there was a lot of these, you could say, consumer staples tobacco companies that were really profitable, But due to regulative measures, the idea that cigarettes could cause cancer was being discovered by this time, and so these companies really needed to diversify in order to ensure that they're able to have consistent long-term growth and value. I think that's probably one of the biggest reasons why. I can't verify it, it's just a theory. So it will be interesting to take a look at some data to see if that's true or not. But going back to what's going on here with RJR Nabisco, the management group, they had the initial bid price of around $75 per share, which is about 34% higher than the pre-offer price of $55 per share. And so they were willing to pay around $17 billion with the help of a few investment banks and a few financiers. Now, once they bought RJR Nabisco, the management group actually wanted to sell off the food business and retain its tobacco business. So they thought the market undervalued the strong cash flows from the tobacco business and didn't really fully value its food business because of its association with tobacco. So one question I have had here was, how would that actually improve the valuation of the of the tobacco business? Because I'm not entirely sure if the idea of just selling off part of your business is going to increase the value of another. I'm not entirely sure. So where I left off here was with KKR. KKR is going to be the kind of next step I look at. KKR is a private equity company that specializes in leveraged buyouts. So I think these guys, after hearing about the management group bid for RJR Nabisco, decided that it would be an interesting opportunity in order to also place a bid for the company at a much more expensive premium than what the management group had. I think KKR's strategy, I don't have it listed here, but the big idea was to actually combine and keep both the food business and the tobacco business. I think they wanted to maybe make the company more efficient, or they believe that the company was being undervalued by the market right now. I'm not entirely sure. Let's take a look if this case... Okay, so I was going to say, I'm not entirely sure if I should stream this part of my screen. Oh, you can't even see it because my screen's frozen. Now I'm going to take a look at this again. Okay, so there we go. Okay, so this is where the author goes a bit into how KKR bid worked. So KKR offered to purchase up to 87% of RJR Nabisco's common stock for $90 in cash. So KKR offered to purchase up to 87% of RJR Nabisco's common stock for $90 per share. Okay, so I think this is maybe almost double the pre-offer price. So this is, let's do some quick maths real quick. I wonder if we can do Python. So we have 90 90 minus 55 divided by 55. Print this out, see what we get. So it's 60%, okay. Around 64% higher pre-offer price. And 64% higher than the pre-offer price of $55 per share. Okay, so there's also the idea of, in cash. So there's two parts to this. 87% is in cash. The remaining 13% was paid for with securities worth $90 per share. Now, I'm not entirely sure what securities these are. Maybe common stock of another company, but it says that whatever value it is, it's $90. Okay. So there's both the common stock of RJR Nabisco, then there's also the preferred stock. So the preferred stock so RJR Nabisco KKR offered $108 per share for the preferred shares of the company. So there's a little footnote here. I want to see what it is. Okay, so I think at the time there was around, this is a good footnote to put actually. So there's about 200 million common stock outstanding, about 1 million preferred shares. I'm assuming that the preferred shares were issued possibly as, okay. I can't copy and paste it, but let's just do 200 mil common stock, around 1 mil preferred.
that discussion, he showed me his method. I said like, can't you just use this? And he's like, oh shit, my TA like messed the whole class up. His whole discussion was messed up.
But I think that it's cheaper for a university to hire a bunch of undergrad TAs than to like actually get good TAs and like more professors.
But TAs are like, I mean, nobody will do like graduate TAs or.
There's a lot of very good TAs, but a lot of it's like based on their own.
Okay, so this case doesn't actually go into who won the bid, but I think history says that KKR ended up taking over. KKR, RJR Nabisco. What's klepto? Okay.
But I actually do like, we were like, usually, like, the last semester at least, it was, I was not like getting the 46 for 2 years, so like, even this semester it is even worse because TS does not have access to our tools, it's just a secret. So, I mean, people usually, thankfully until now I haven't really gotten sent this, so the people have asked me like, but like TAs usually said like, you should write more students. I'm like, I know that.
Yeah. Anyways, I'll get back to you.
I'm just sitting here looking.
Okay, so I'm kind of reading through some, I guess you could say, journalist ideas about what's going on here. And they have an interesting take, and the idea of corporate, what's it called? Kleptocracy. The idea that a few managers or senior leaders in a company will siphon or take away value from shareholders of a company in order to increase their own wealth. And these journalists think that this KKR takeover is an example of that, where RJR Nabisco was a seemingly healthy company that got saddled with a substantial amount of debt, and that debt in itself was then pretty much weighing down the entire company that I guess you could say was pretty healthy at the time. And so there was a bidding war that got set off between KKR and then also RJR Nabisco. There was a lot of leverage involved. And I guess you could say a lot of investment bankers that was able to profit from advisory fees. Okay. Do you want to see though? So I do want to take a look at take a look at this. I do want to take a look at the cash flow projections under KKR and also under the management group. So I think this is pretty important to understanding what's going on here. So I think we can go to Bzang and then maybe desktop. Okay. Move these into the folder and then we'll do so this is cash KKR projections. Then this is gonna be management group projections. I'll rename this actually to kkr.png and mg.png. Alright, so let's see what happens if I try to preview this. Image in Quarto. Yeah. KKR.png, mg.png. Alright, let's see if this works. Nice. Okay, so this is the KKR cash flow and capital projections. Okay, let's start with the KKR thing first. So we can see here that in panel A, they've broken down the operating information to two different revenue segments, food and tobacco, contrasted to management groups where their sales comes from a single source, and that's going to be tobacco sales. Okay. Then you have the actual operating income of the company, and there is, I guess you could say, a higher operating income for the KKR case just because of the additional $1 billion in income from the food business. Interest expense is surprisingly the same for both companies. Amortization is around the same. After-tax income is a bit higher than management groups. Depreciation, capital expenditures. Okay, so it seems like KKR is projecting higher CapEx spending. I'm assuming it's probably going to be towards their food sales, or I guess their food business. I remember in the case, I think the author was saying something about how the company was thinking about creating new bakeries for some of its food business, and that's going to cost around $1 billion in capital expenditure spending. Non-cash interest expense, change in working capital. A bit higher. And net proceeds from asset sales. So I guess there is a sell-off of some assets, but I'm not entirely sure what it is. And I can see that, okay. The food business is, the management group plan on selling for about $12 billion. And the assumed debt, yeah, what I don't fully understand though is okay, wait. I guess this does make a bit more sense. Right. Okay, so I have to remember that these numbers are in millions. And so interest expense here, that is $2 billion worth of interest expense. And I guess you could see immediately here in 1989, you have about $3 billion of interest, but then you also have $11 billion of principal repayments. And so in 1990, that almost $3 billion drops down, it halves. So now you're only paying $1 billion in interest expense. So, I guess you could say maybe KKR's. Yeah, KKR, they are definitely going to have a lot more debts on their balance sheet compared to the management group. The only reason why the equity value is higher in the management group in the KKR case is because you're keeping some of the core businesses and not selling them off. I guess if you were to look at the ratio of debt to equity, then the management group does I guess you could say it's about the same actually. Maybe management groups it's slightly bigger, but it's about the same. So there's really two different strategies here. It's interesting to see how they compare. Okay. So what are some notes I want to write about here? And take a look at the cash flow projections. So KKR strategy is to keep the core tobacco and food business of RJR Nabisco with little keep the core tobacco. Company did forecast. So KKR say this. KKR did forecast selling off around $5 billion in assets in the 2 years, 1989 to 1990. And I think that's in order to help pay off the principal on its debt. So I wonder if there's a way we could turn an image into a table pandas data frame. Is it possible to turn a table into
Was that the RL?
image of a table into a data frame? Python.
Yeah. Yeah, he's great, he's great, he's great. Interesting. I mean, because Ariel, taking you to some of these information, gradient and stuff, so is like the way that we have a thing into a while. We can do right now, Ariel it's so hard to tune. And hopefully
This kid is not able to.
well, you include Ariel. Yeah. So. Exactly. I think it has to be connected to model-based learning. Otherwise, it's we are wasting way too much time learning from scratch. When we already
Oh, okay. So maybe there's a way you could turn this into. It seems like there's a way to do this in Excel. You could turn an image of a table into an Excel file. Let me see if this actually works though. Click on data from picture. I don't see anything that says data from picture. Maybe here. Oh no. What's this? Excel data from picture. Okay, so file. So this is saying that there might be a analysis. Oh, is this picture from file? Oh my god, if this works, this is crazy. Wait, insert data, let's see. Review. Tobacco sales. Accepts. Interest expense, 388. No proceeds from asset sales. Okay, let's just see this. Alright, insert data. That is so fire. Oh my god. Okay, I'm not gonna lie, I be shitting on Excel all the time, but that is actually pretty cool. I had no idea you could do that. Alright, so maybe there's a bit of organization that I have to do, but I think that this does a pretty good damn job. So I think this is what we need to do. Principal payments 2. Wait. actually, I do think. Oh shit. Insert. Alright, here we go. Okay, so KKR. Alright, let me also just do some, I guess you could say, eyeball checks. Total operating income. Okay. And then let's try to indent this. Okay. Tobacco, food, corporate. Oops. Oh wait, this is total sales. So this is operating income total. Alright, so this is the total operating income. Alright, so then you have the idea of, so interest coverage ratio. I think interest coverage is you divide the net income of a company. In this case, we're given operating income, so we'll take operating income, and then we'll divide that by the interest expense. So I guess you could see just how much of earnings go towards the repayment of interest. And if you don't have enough money to pay back interest, then the company's fucked. It can't really do anything. It could borrow more, but that's just going to increase the leverage of RJR Nabisco. Or it could file for bankruptcy, in which debt holders come in, seize all the assets. So I'm going to create a section called financial ratios. We'll call this interest coverage. And we'll take the interest expense, divide that by, we'll take the total operating income, divide that by interest expense. So we do get divide by zero error. Interest coverage ratio. Earnings before interest and taxes minus interest expense. Okay. So I guess you could say operating income. That makes sense. Oops. Ah, shit. Okay. I guess you could also say debt to equity. So I'm gonna just take the total here, divide that by the total here. So the company claims it can remove the amount of debt by the end of 7 years. Within 7 years, the company is going to be able to repay all of its debt or convert the debts into common stock. I don't know if I have a strong belief in that. Let's see. So, debt to equity. And I guess you could also say the leverage ratio. And we have. So, how much of our company's capital structure is comprised of debt? So 80%, and that eventually goes to 0%. Let's do this actually. Yeah, there we go. So 82%, 77%. Our company is pretty much all debts in the beginning. Yeah, that's the main takeaway here. Okay, so there's the idea of assumed debt. So assumed debt is whatever RJR Nabisco has in debt outstanding, so whatever loans it has or any bonds that it's issued, this is the debt that KKR would take on. And so I think at the end, or I guess you could say at the beginning of the takeover, there's about $5 billion worth of assumed debt that the company has to take on. And so anything above this is whatever KKR has to borrow from. KKR has to borrow in order to pay this off, but also in excess is whatever paid for. It's whatever it's. Let me say this again. Whatever amount of, I guess you could say, debt in excess of the assumed debt is debt that's used to purchase the existing assets and maybe the future assets of RJR Nabisco. So you have subordinated debt, and I think subordinated debt is the idea of unsecured bank loans, or maybe unsecured loans. Could be made by banks, but most likely some type of lending institution or maybe an investor. Unsecured, and I think junior debt. So it's not secured by collateral, and also it doesn't get paid back before the senior debt holders, which I think refers to the senior secured bank debt, which is bank debt. These are the first in line to get paid back in the event of bankruptcy. They're secured by collateral, aka assets from RJR Nabisco. And then finally, there's converting debt. So these are debts with some type of, I guess you could say, covenant that allows the debt holders to convert through some type of formula or maybe some promised amount of shares their debt into, I think, either preferred shares or common stock. So there's also two different, I guess you could say, equity financing that RJR Nabisco has. They have both preferred stock and common stock. Now, preferred stock, I'm not entirely sure what exactly it's used for. Maybe I know kind of the textbook definition of preferred stock versus common stock. Preferred stock, these are equity holders that have higher claims on dividends that a company pays out, has no voting rights, and I think in the event of a company going bankrupt, preferred stockholders get paid back first compared to common stockholders. Now, I do think, though, that preferred stock is treated more like a debt security that has, I guess you could call it consistent, maybe not consistent, but at least more consistent cash flows than common stockholders. And those cash flows come in the form of dividends, and if you're a debt holder, then those cash flows come in the form of interest payments. So I think maybe one of the reasons why RJR Nabisco has preferred stock, or maybe why KKR is issuing preferred stock, is so that it doesn't dilute its existing common stockholders. So diluting common stockholders is probably going to reduce the amounts of earnings that each common stockholder has for a single share that it owns. So what I'm thinking about here is earnings per share is going to decrease as you increase the denominator by issuing more shares, issuing more common stock, diluting existing shareholders. So there is a trend here that shows the preferred stock increasing, and I do think that this might have to do with convertible debts and possibly issuing more preferred stock as the company tries to pay off its bank debt and also its subordinated debt. Yeah, this is probably going to take a more in-depth analysis behind the numbers and maybe taking a look at some of the ratios here. But there is one thing I want to take a look at, and it's, we could say, revenue growth and income growth, because I just want to see how KKR believes Okay, so there's about an 8.2% growth in revenue. Oops. And then the operating income Okay, so there also seems to be, let's say, seems like it's more of a 8 to 9% growth in the long term, and in the short term, maybe a higher growth rate in its tobacco industry, tobacco company. Okay, so with that being said, I do have class right now, so catch you guys in the next one. But I feel like we made some cool progress. This data from images that Excel has is pretty interesting. I'm going to take a look at it and play around with it in the next stream. I'm going to call this RJR Nabisco data. Yeah, so with that being said, I'll see you guys in the next one. Peace. Peace.